Alright guys, thanks for coming in for another episode. We're going to be covering my day trades today on February 8th, it's Friday. Let's get right on into it. So, first stock I had on my watch list today was COLM. That's Columbia Sportswear. Um, so this stock, it was gapping up huge on an earnings report and it was reaching the high of the lifetime of the stock, I believe, if we go back 15 years. So this is the highest it's ever been, gapping up here pre-market. Um, so that means that I had no previous high levels to go off of. So what I did was I had to go in and mark my levels off on um, the the 1 minute time frame on the pre-market action. So if we go here on the 1 minute time frame and we look here at pre-market, we can see it came up and it hit this level, and that's where I put my line. Now, um, it also played off this level too, so I put a line here. This is just this is the basically the range of the pre-market trading. So that gives you an idea of what to do from there. You're looking for it to either hold in this range or break out of it. Now, so my plan coming into this was I was looking for so I had in my notes that it was on an all-time high breakout. So that means I don't have much experience with those guys at all. But what I do know is that typically if something's reaching a new high, then it will continue to run. So at least for a little bit, and it'll also sell off too. But you can look for a continuation in this scenario. So keeping that in mind, looking for a slight continuation. I made a theory that I was going to look to go long early on a scalp play. This is the 4 hour chart, guys. Let's go to the 1 hour. So I was going to look to go long early on a scalp play, and I was going to try to buy off a pullback. So I was going to wait for the stock to come down a little bit and then buy. I was looking for a pullback to, I said possible pullback even to down here because I really had no idea, but that might not have been the best reasoning. So let's break it down to 1 minute one more time and go back in and look at what exactly I did. If so, so guys, the reason I say that wasn't maybe the best reason is because when the stocks, my reasoning maybe wasn't the best when I said I was going to wait to buy a pullback down here is because the stock is reaching new highs, and if it is going to pull back, it's not going to be much. So looking back on that, that wasn't a good plan. It might have thrown me off on my entrance in this case. Now looking in it, let's see what actually happened. So this is the 1 minute time frame. So the stock opened up at this price level here at 103.37. It dropped down to 102.80 and then immediately shot up here to 105.77, all the way up here above our pre-market level that we have marked off here. Now, so keeping that in mind, as soon as it did that, I realized that it was strong, and I realized that it's probably going to keep running because it just broke these. A lot of times when they break these, they'll keep running when they break these pre-market levels. So let's go ahead and just show my trades. So I went long at 105.55. So I went long right there. You can see that. I don't know if that's a good arrow. I went long right here, 105.55. Now, I went and then I set my stop loss right here on this yellow line at 105.20. So I only went 50 shares. So that's only a $12.50 risk right there. Now, The reason I only went 50 shares is because, as you can see, I bought up off this line here, off this support level here, and I knew that typically they pull back to the support. As you can see, the next minute it pulled back here, and it actually came. This candle here was red, and it was going all the way down to here for a minute. And so that's why I only added 50 shares, because I knew I was kind of chasing it. I should have just waited and added here all the way at the bottom and not even added here, but I chased it and I only went 50 shares. And the reason I only went 50 shares is because this stock is only a 31 million shares float. So there's only 31 million shares that are being traded. So that's relatively low float, and they move faster. Therefore, you need to take smaller share size because you can lose money a lot quicker. So once it pulled back to here, I added another at 105.64, which would be right here on this candle. Okay, and my stop, and then so I added there, and then it came up and made this run up to 106.61, and at this point it was slowing down. Now it broke out of this level, and I'm watching the 106.50 level because, well, first of all, I'm watching the 106 level because the whole numbers can play. They're important as support and resistance, and then it broke above 106, but and then it broke 106.50, and then I got excited. Normally, if it's going to keep running over a 106.50, it would typically go to like a 20-cent move. So you'd be looking for. I was looking to take profits around 106.80. I was looking to take my first 50 shares off, but this candle slowed down, and after a breakout like this, you're looking for a big push, and that push never came. So once it slowed down, I got nervous and I saw the market wasn't looking hot, and I took 50 shares off there, and then we got this drop and I took another 50 shares off. And on that trade, after that trade, so I was up $70.50. So that's a $70 trade right there. Had I taken proper share size on this pullback and taken 100 shares here at 105 and rode it up to 106.67, it would have been a $150 gain in that ballpark. So that would have been a better trade to go with there. Or honestly, I should have altered my strategy in the beginning to be prepared to buy quicker because I knew the stock was at all-time highs, so I could look for immediately continuation. And as we can see, if I had, and one more thing about this, if I should have been looking at the 5-minute chart at the time. If I was looking, so this is called a 5-minute opening range breakout. You get your first 5-minute candle here. This is the same stock, just 5-minute candles. So you get your first 5-minute candle. It breaks out of these pre-market highs, this level, and then you can, the strategy a lot of people say is to take this break right here on this push up, but what I like to do, but I haven't been able to put into practice that well, but I need to buy on this next 5-minute candle that pulls back. At one point, this 5-minute candle was all red all the way down to this line here. Now, that's my entrance point, okay? That's where I need to be buying, and then playing this after that, playing this all the way up here and letting them ride and selling on the backside down here at 109. At the break on 109, that needs to be my sell up here. So that's how I could have played that better. Instead, we go, and guys, that's a 5-minute break opening range breakout strategy, and then there's also 15-minute, 30-minute, and 1 hour. And so I need to kind of hone that skill a little better. And then we can see here, I went long again up here over these breaks, chasing it, and I went 106.90, and I got stopped out for an 8-cent loss on 100 shares. So an $8 or $9 loss on that, and I said that the market was rolling over. So And the other thing that scared me about this stock, I would have tried to hold this all the way up through here. Sorry guys. So I would have tried to hold this all the way up through here, but the problem was this stock, it wasn't trading on very high volume. So when you have a breakout, you want there to be a lot of volume behind it because that'll continue to drive the price up and it confirms that there is a high demand for the stock. When a breakout happens and there's not a lot of volume behind it and it's a slow grind up like this and it's grinding up slowly at the highs, it made me uncomfortable. So that's why I wasn't comfortable holding down here through this. But so that being said, looking back on, I should have had a cooler head, bought down here on the bottom on the 5 minute candle pullback, and then held the breakout for a an moving average trend trade. So this is a 9 moving average. So it's trending above the 9 moving average. So this is a hold. You would hold that and sell at the break of the 9 moving average down here. So that could have been played better. Now let's go on to Facebook. Now, so guys, for Facebook, we'll just go here to the 1 hour chart real quick. So in pre-market, we can see this is the pre-market today. This is yesterday, and so each one of these black lines is a day. And so this was pre-market. It was finally broke this blue line here of 165.90, the 165.90s level, and it broke it. And I was looking for, I had written down in my notes that I wanted Facebook to retrace back up to this 65.90s level, and then I was going to look to short down. And as you can see, it came up here, and this wick, you can see the price reached above this level, almost right at this level to a T, and sold all the way off back down here to this level. So unfortunately, I didn't catch this. I was preoccupied with the last trade, and I didn't see it in time, and I tried to get on it late. So let's break it down in the 1 minute and see what happens. So looking at the 1 minute here, we can see that it came up, touched the blue line perfectly that we had talked about, and then sold off, just like I had written down in my plans that I should. This was my execution point right here for a short. Instead, I missed it looking at the other stock, and I came back and it had pulled up to the VWAP, and this is where I shorted. So I went too big a share size. I shorted 300 shares here, and I I lost $23 on this, guys. So that was not good. We just didn't get the continuation like I wanted. I was chasing. I missed my entry point. I need to be better about my entries. Now, the market was dropping significantly today, and whenever that happens, then this is the volatility index. So this stock measures volatility and the fear in the market, and I also traded this. As we can see, the market came back and ran, so this volatility index ended up going down, but I was going long on this index here, watching the market. I went long plus 200 shares over this at 40.31, and I held, and I was up a little bit, but the market started to gain strength, and this began to roll over, so I stopped out. That wasn't a good idea. I should have been more selective with my stocks. I also went back after that and took another trade on Facebook over here. I changed my bias and I decided I'd go long here because the market was running, and I went long here, 200 shares right here at 165.95 with a tight stop loss. And I sold out up here before this big drop for only a $33 gain on the day, and that brought me to minus $30 on the day. So all in all, things could be better. I got a lot of work on, and I'm gonna do a review in the next video talking about